Prakash Diwan is now joining in to take some questions on the market. Prakash, good to have you with us here. Good afternoon. CSB Bank, let's just begin there. You just heard Abhishek outlining the numbers. 40% gold book on an overall basis. Growth has been generally good, but of course there are problems as on the margin front. How would you look at this name?
Good afternoon, Prashant. So, we spoke about this even last quarter. There's a lot of expectation that's built up because this was one bank that came from absolutely out of the blue, got into the gold loan portfolio, started competing with the gold NBFCs in a very aggressive way in their own, territories of sorts. But the kind of scorching pace at which they had to grow to keep expectations in line was, to keep in line with expectations rather, is something which was, likely to kind of, impact margins. I mean, you can't grow a book so rapidly, especially in the face of stiff competition in a market where, interest rates are going up and hence, demand is always going to be a little bit inelastic in that, elastic in that sense. But what's worked for them, is the fact that this was something they set out as targets. I mean, if the street actually understands that this is something as part of the strategy where you grow the book and then focus on margins and cross-selling and upselling to the same customers, things could change. But at this point in time, I think the phase in which they are, given the new ownership and the new management, focus that they've articulated, it is going to be a bit of a dampener for people because expectations were too high. So, don't expect growth which comes at great margins all the time. But I think this could ease out in the next quarter or two. It's not something which is a very major cause of worry for long-term investors. But yes, for the tactical short-term investors who've invested, let's say, in the last year or so, it could definitely be a disappointment, especially coming at the fag end of the year. This quarter should have been much better.
Prakash, hi. I wanted to get your thoughts in on PI Industries. But before that, let me go across to my colleague Ekta. And she's going to be telling us about PI Industries' plans to acquire two pharma companies of the US-based Therachem Research. Ekta, take it away.
Thanks for that. Well, yes, the company is going to be acquiring two acquisitions, which is going to help them make inroads into the pharmaceutical space. This will be funded via cash as well as their recent QIP proceeds. Now, the first company is that they are acquiring Therachem Research Medilab for $50 million. There's an additional $25 million in terms of performance-linked payout in the next 6 years. It provides services in preclinical and clinical stages, consolidated revenue $33 million for FY22 and EBITDA positive as well. The company is also acquiring an Italy-based small molecule and API manufacturer as well as a CDMO manufacturer for 34.2 million euros. Again, it is making around $45 million in terms of revenue in CY22 and EBITDA positive. Impact is that it is going to be positive. It is expected to be earnings accretive as per the management, and it will help them build a differentiated CDMO offering across the value chain. Now, Nuvama is positive. They've said that, it is a lucrative deal. Implied EV to EBITDA is at around 4.2 times. They've upgraded the stock to buy from hold. Investec has a buy target price of 3,800. EBITDA margins are tad lower, but it should add another growth avenue plus help diversify revenue. Axis Cap valuations look reasonable prima facie at around 4 to 5 times CY22 EBITDA. So it's been given a thumbs up across the board from brokerages and looks like a good deal for them.
Well, indeed, Ekta, thanks a lot for that. We had a couple of deals announced this week, right? And this markets gave their verdict on both of them, whether it was Godrej and Raymond. The street believed that maybe, in fact, Godrej paid too much for it. And that's why the stock has pulled back a good 100 rupees, actually, from the time we came to know about this deal. And the other one as well, Ipca and Unichem. When there's a marriage, always there is some kind of opinion that comes in. And it seems that everyone was not on the same page, but at least for PI Industries, they're acquiring two unlisted players. PI Industries up 10%. Yeah. So looks like it's the proper,
Distant relatives called analysts.
Indeed. Prakash, what do you make of this one? PI Industries, Mr. Singhal, when he comes on the show, we keep asking him, what are you going to do with that money in your books? He said, I'm looking seriously. And he's announced it, and the street likes it. Stock locked 10% higher.
No, absolutely.
Your view on the stock?
Absolutely, Nigel. The way you said it, it covers everything. It's a marriage that makes a lot of sense. It's so clearly win-win that you really don't need to second guess in terms of why the management is paying what it is paying. The inspiration is for such companies which are generating so much of cash. there is going to be a little bit of a plateauing in terms of their core chemical, business related to whichever segment, whether it's insecticide, whether it's industrial chemicals. There is a plateauing that's evident, and we've seen that in the biggest of names. Let's say Aarti. I mean, the reason they did this similar thing of demerging their pharma activity into a separate spin-off and an entity which could grow faster was the same logic was evident out there a couple of years back. Now, PI Industries bought into something which is going to be both of them are going, businesses that are running. They are EPS accretive. In fact, the Archimica business, the Italian business, is available at, they bought it at a valuation which is fairly attractive, I must say, given the peer group in Europe and all. And what it helps do is it straight away gets them into the value chain and kind of learn along the way to be able to expand into other markets using these base. There is a lot of regulatory advantage that they get acquiring, existing businesses with all those the network effects of the regulatory approvals that these businesses carry on the books. So I think it's no wonder the market likes it. You had cash sitting on the books. You couldn't have put it more into expansion in the core business beyond a point. And this is something which catapults you into a very different revenue stream, which is also fairly large. So I think it will make sense. I wouldn't be surprised if you hear similar acquisitions down the line from a company like this as they generate cash and start, getting the success rate improved by these acquisitions. They will learn, they will digest this and probably grow more inorganically at a faster pace.
By the way, the Nifty is now taken out levels of 18,000, and this has happened for the first time since the 20th of February. The Nifty and the Sensex continue to march higher and higher, and now it's a 0.5 percentage point gain on the benchmark indices. Look at that spike in the last 10 minutes.